Imagine this. You're a bank manager. Someone sits right across your desk, hands you the original title deeds to this absolutely stunning piece of real estate. And based on that, you lend them, let's say, 50 lakh rupees. Seems like a perfectly standard day at the office, right? But here's what you don't know. This person just exploited a massive loophole. Using what's called an equitable mortgage, they've somehow managed to secretly pledge that exact same house to 3 other banks across town. No way, right? But before 2011, there was actually no central database in India to check if a property was already encumbered. Bank B had literally zero idea what Bank A was doing. So how on earth do you stop this historical nightmare of multiple mortgage frauds? Well, that's exactly what we're tackling in today's Explainer. Today, we're diving deep into CERSAI. Whether you're a banker, a legal professional, a student of finance, or just an everyday borrower looking to buy your dream home, CERSAI is absolutely the hero of our story today. It's essentially the ultimate gatekeeper for India's secured lending landscape. We're going to break down exactly what this thing is, how it protects your hard-earned money, and why absolutely no major property transaction today should happen without checking it first. Okay, let's dive into this roadmap for our explainer today. 1. The multiple mortgage problem. 2. Enter CERSAI, the digital shield. 3. How the registry actually works. 4. Impact on banks and buyers. 5. Practical tips and key limitations. And finally, 6. A quick disclaimer. Section 1. The multiple mortgage problem. To really appreciate the solution here, we kind of have to understand the absolute chaos of the past. Historically, the whole lending ecosystem basically ran on a trust-based system. If a borrower just said a property was clear and they had some decent-looking paperwork, well, banks often just took their word for it. Honestly, without a central database, this system was incredibly prone to double financing and outright fraud. The ecosystem desperately needed to evolve from relying on blind trust to a strict verify-based system. It needed a centralized digital registry that could fire off an immediate nationwide public notice the exact second a charge or a lien was placed on an asset. Which brings us to Section 2. Enter CERSAI, the digital shield. Launched back in 2011 under the CERSAI Act of 2002 and overseen by the Ministry of Finance along with the RBI, we get this incredibly long acronym, CERSAI. It stands for the Central Registry of Securitisation, Asset Reconstruction, and Security Interest of India. Phew, that's a mouthful. But what's absolutely crucial to grasp here is the sheer massive scope of what this registry actually covers. It's a central electronic database of security interests. That means anytime property is pledged for a loan anywhere in the country, it gets recorded here. And it's not just for immovable things like land, flats, or office buildings. Nope, it also covers movable assets. Think plant machinery, cars, commercial vehicles, and even intangible assets like book debts and receivables. Basically, if an asset is charged to secure a loan nationwide, it is locked in right here. Section 3. How the registry actually works. Let's move along and see how this builds step by step. The mechanics of CERSAI actually follow a really logical, straightforward life cycle. Step 1. The loan is officially sanctioned and the borrower pledges their asset to the bank. Simple enough. Step 2, the lender jumps onto the CERSAI portal and registers all the vital details. We're talking the borrower's PAN, the exact property address, the survey number, the whole shebang. Step 3, the system then generates a unique asset ID for that specific piece of property. Moving to Step 4, a lien is officially marked. The property is now digitally locked under that lender's name. So if another bank tries to search for it, boom, they'll see a massive red flag. And finally, Step 5, the satisfaction of charge. When the borrower repays that loan in full, the lender actually has to log back in and update the registry to officially show the asset is now completely debt-free. Now, the really absolutely critical detail here is this specific window, 30 days. You see, this whole system only works if the data is fresh. So the law actually mandates that lenders must register the details of the charge on the CERSAI portal within 30 days of the transaction. If a bank or financial institution misses this strict window, they're looking at some heavy penalties. But honestly, it gets worse. In cases of borrower defaults or, say, insolvency proceedings, failing to register could literally mean the bank loses its legal priority to recover its money, compared to other creditors. 30 days is the magic rule. Section 4. Impact on banks and buyers. You know, one of the most amazing things about CERSAI is just how accessible it is to everyone. While loan registrations for banks cost a nominal 50 to 100 rupees, consider the public search fee. just 10 rupees. I mean, that's a real game changer. For essentially less than the cost of a cup of tea, any citizen, any property buyer or lawyer can hop online, run an asset-based search on the portal, and instantly see if the property they're dreaming of buying has any hidden, nasty debts attached to it. And this brilliantly illustrates why CERSAI is such a massive win-win for both sides of the coin. For banks and financial institutions, it completely shuts down that double financing fraud we talked about earlier. It clearly establishes their priority of charge and massively strengthens their loan appraisal process. Actually, checking CERSAI is now a completely non-negotiable compliance step before sanctioning a loan. And for you, property owners and everyday buyers, it acts like an incredibly powerful early warning system. It reveals those hidden liabilities, protects you from fraudulent benami transactions where someone tries to sell a property they don't actually own or that's secretly mortgaged to the hilt, and ultimately ensures the collateral you're buying is completely clean.
Section 5. Practical Tips and Key Limitations. Now pay close attention because this is perhaps the absolute most important caveat of this entire explainer. While CERSAI is an incredibly powerful first line of defense, it definitely does not replace a full legal title search or an encumbrance certificate, what we often call an EC, from the local subregistrar. CERSAI is fantastic for spotting bank mortgages and registered charges, for sure, but it's not going to show you the 30-year chain of ownership. It might miss private liens, and it definitely won't show municipal defects. So think of it as a crucial supporting tool, not a standalone, all-in-one clearance. So to wrap our heads around this, here is a quick, practical checklist you can walk away with. First up, always check CERSAI before doing any property deal. Just spend the 10 rupees. Second, if you're a borrower, the very moment you pay off your loan, chase down your bank. Ensure they actually file that satisfaction of charge so your property is marked clean in the national database. Third, like we literally just mentioned, always combine your CERSAI check with a traditional encumbrance certificate. Fourth, if you own high-value property, it's totally worth monitoring your entries annually just to catch any weird data entry errors that could cause disputes later on. And fifth, for all the banking professionals out there, remember that verifying these records before you sanction a loan is absolutely mandatory for your compliance and risk mitigation.
Section 6. Disclaimer. Just before we wrap up today, I really need to note that this explainer is strictly for educational and awareness purposes only. It does not constitute legal, financial, or professional advice. The fees, laws, and specific portal procedures we've covered today are, of course, subject to change based on government notifications. So whenever you're dealing with real-world real estate transactions, mortgages, or any legal disputes, always make sure you consult a qualified legal advocate or a registered banking professional. We started this journey looking at a wildly flawed system based entirely on blind trust, where a single house could literally be secretly mortgaged multiple times. Today, thanks to CERSAI, we have a verify-based system that brings some seriously needed transparency and security to the entire Indian financial landscape. So I'm going to leave you with this final thought to ponder. In today's high-stakes lending environment, where millions of rupees change hands daily, can any credit decision or property purchase truly be safe without checking the digital gatekeeper first? Thank you so much for exploring this fascinating topic with me. Keep verifying, keep learning, and I'll catch you in the next explainer.